Welcome, ladies and gentlemen, to the latest weekly report for the 23rd of February 2015. As we are talking about finance, risk warning, all advice is of a general nature only, must not be misconstrued as personal advice, and past performance is no guarantee of future result. Okay, let's have a look at some of the charts now. And what you should be seeing before your eyes there is the chart of the ASX S&P 200, and you can see the market in the last week they're just really shooting upwards. Right there, I've just adjusted the chart there, so we're on the monthly chart. Let's move to the weekly, and you can see 5, 6, 7-year highs, and on the daily basis pushing right up there, but off the highs of last Friday when we did, it was actually Thursday when we had a push up. Greece is still dominating news flow on financial markets. Overnight they've requested another data compilates reform letter, which was due Monday, but the market seems to have embraced the 10-4-month extension to the Euro 172 billion Euro bailout program. So with that in place, we've also got issues with world central banks. We saw in Israel the economy is growing quite strongly, 7.2% annualized in fourth quarter, but still they have trimmed their benchmark rate by 0.15% to 0.1. So currency wars are still at play at the moment, and the Aussie dollar is was knocked last night as well. Let me just adjust the chart here. What's going on? There we go. Okay, so it was starting to put in a bit of a rally. Actually hit a 2-week high yesterday before pulling back to 78 cents, but well off its 92 to 94 mark that it was at early part of last year. Right, let's move over to look at some of the positions. And first up, QBE, got the covered call there, and this position is in a nice profit. Actually reporting today, we were interested in closing this trade out early, but with the volatility associated with the sold call option, the most we could actually get is about 4.9%, missing out on a whole, I think 1.2% of maximum profit. So this trade can actually yield up to a bit over 6%. Not there yet. We do have expiration on Thursday, and so as long as that can stay above 11.25, we've got a big profit there. Real no change to NAB from last time, so I won't dwell on it. Small profits there, looking at about 1.6% gross, well above our $35 strike. Medibank is after reported on Friday, a very volatile session, but is holding above that $2.40 mark. So with 2 days to go, watching that very closely, looking for that 4.1% profit there. And lastly, Santos, it is bouncing around, but at the moment is holding above $8. Did below that on Friday, but if we get that $8 result there, we've got something around a 6.8% profit. So I'll be watching that one very closely indeed. Actually, it's $7.75. $7.75 is the strike, so well above that. I'm thinking $8 because that's the spread strike. Okay, so let's not get mixed up with those two. $7.75 is where the covered call strike is, and that's for a 3.5% profit. And since we're on this chart, we will discuss the spread. It is a $8.01 to $7, but this is for March. So at the moment we're in the full profit zone, but do need time decay to further weigh on the stock. All right, and Toll was exited last week as it jumped from its 6.20 mark up to just under $9, as you can see on the right side there. So the full profit from the cover call is realised. Unfortunately, can't do any more about it, but that was nevertheless 3.74% for about a 2-day position. Alright, mixed results in the spreads. Obviously the bearish trades aren't doing as well, and that is on CBA and Wesfarmers, whereas our bullish trades Santos and Woolworths are doing quite alright. We've also got a newish bullish trade on Telstra and Rio, which are doing okay, but still very early days on those ones. And XJO, a little bit out of the money, but a lot of time to go on that trade. So first up, CBA, well above our strikes there, and just really pushing up at the back end of January, in light of and also in light of that interest rate cut locally. Wesfarmers was actually holding on to that resistance line there until middle of last week, where it has broken above that. So that is quite a movement there. We do have the dividend still in place before expiration, but with that jump above that resistance at $45, that does give less weight to see a turnaround there. Woolworths, looking at that position, got $30 on the bought side, $32 on the sold side, and nicely above it. So well within the profit zone there. Just need more time decay to occur, as that is a March expiration. We covered Santos. Let's have a look at the index. Now remember, the XJ, unlike the SPY, hasn't got dividends already priced in, so we do have quite a number of dividends which are expected to push the market down. We do have that bought leg at 56.50 last Thursday, the sold leg for February expired worthless, which means that full profit was locked in of about $150 per contract. Some people bought 1, 2 or 3 combinations there, so that sold position working quite nicely, but we do need to see a dip in the next week or two for that trade to recover and start recording the profit. Okay, Telstra trade, that's a longer term trade going out a number of months. We sold the 6.51. This will be a bit of a slower trade, not too dissimilar to a covered call there, but with the stock going ex-dividend, that should push it below 6.51, and then we've just got a bit of time decay to wait until March, and then we'll keep on selling call options to lock in that income source over the coming months. And then we've also got Rio. Rio just had yesterday a longer dated call option out till December, so it's about 10 months at the $55 level. Got a high delta of around 0.81, I think it is, and we averaged our entry price nicely yesterday as the stock dipped a little bit from this morning, entering at 10.17 was the average, I believe, which was below the limit price of 10.50. Alright, so with that trade, looking for a combination of a number of factors there. It all just depends to see how quickly it does rise and rally. But if we do see a quick increase in the share price, we might just close the trade at a profit, or we could also elect to sell call options if it's a slower rise. So a number of options there, or choices to use to apply options and take profit strategy with this trade. So we'll let you know what we do when we see the opportunity, but by and large we are looking for that increase in share price first before we take action. Alright, ladies and gents, I'll wrap it up there. So in summary, with Toll and with all the covered calls in the money at the moment, that's 9 profitable covered call trades as we stand at present. in a row. The spreads are a lot more mixed because there are bearish trades in there and hedge trades, and obviously those trades don't do so well in a bullish market. So more of a mixed bag there, but we will keep an eye on those trades, watch them very closely, and make sure they're managed in line with the trade advice. Now, if you have any final questions, feel free to give us a call at the desk. More than happy to assist you with those. Otherwise, have a great day and great rest of the week. We'll talk again this time next week. Thank you.